Good morning. I'll be with you in a moment. And I'm live on Divergent. Good morning, Europe. I hope you're well. Happy Easter. Hope you had a nice and relaxing time away from the markets, or not. I should be live and coming through loud and clear. The markets are opening in approximately 1 minute. So here we go. And just if you need a reminder where the market's closed. Oh, actually, that's not even. I'm gonna have to. So the DAX closed at 205, so it's up here. But I think because it was a holiday, my extension software that sits on top of the platform isn't showing it. So it's about here. It closed thereabouts, and the FTSE closed at 8275. So actually this is the same story. So actually the FTSE is up in spite of the big sell-off on Wall Street yesterday. So today is my first day back live streaming. And and of course to the Catholics of the world, my condolences with the passing of the Pope. haven't adjusted my trading sizes yet. So we're coming up to the completion of the first 5-minute bar in about 10 seconds. There is a chance, I think I started that sentence, there is a chance that I'm going to take it a little bit easy today and may not necessarily follow the conventional signals. In my experience, the day after a holiday can be tricky because the US markets were open yesterday, and as a result of it, there is some, shall we say, catching up to do in Europe. For example, it doesn't quite make much sense to me why the FTSE is up on the morning, considering how deeply discounted the Dow now is compared to the FTSE. What I mean by that is that the Dow was at one point down 1,300 points yesterday and closed down about 1,000 points. But because the FTSE wasn't trading, because it was a bank holiday in the United Kingdom, Easter Monday, and the same for the DAX, we got this situation here where there is somewhat of a positive note in the Dow after the deep sell-off yesterday. I can show you that on a 30-minute chart. So as you can see, we actually recovered quite a lot. And so Europe is trying to figure out, well, what do we do now? Do we factor in yesterday's sell-off? Or do we take for where it is right now? So here's a school run setting up, sorry, a first bar negative setting up in the FTSE, and this is what I mean. I'm somewhat hesitant. I think I'll take the trade just out of principle. So let me post that. So this is a setup called the first bar negative. And the problem with the first bar negative also today is that the open and the close aren't that different from each other either. But we'll see. You can sort of, so this is what it looks like on my account. DAX is DAX is coming off a little bit. So the DAX is reflecting better what happened on Wall Street. So even though Wall Street is trading higher and is currently trading about 700 points above the low of yesterday, certainly some uncertainty on how to price that in the DAX. This low here in the DAX doesn't make that much sense to me. 21,077 isn't really anything. Excuse me. So you have 4 negative bars just before the open and then after the open. I imagine that I think the hourly bar to me in the Dow suggests that we will be headed back up to about 39,000. But the price action in the DAX just, to me, confirms that suspicion that I often have after a holiday. It's almost as if I'm trying to say I'm not buying it. Both literally I'm not buying, but you know the expression, yeah, I'm not buying that. As you can see, my FTSE position is not doing much, but it's not good. It doesn't afford me the opportunity to add to the winner. Perhaps if I showed you something different. Here's the FTSE on a 15-minute chart, but without the overnight session. So you can see that the last trading day we had was the 17th, which I think was the Thursday, yeah. That's probably a better look. And it does suggest sort of a trading range environment with frequent bursts higher initially and then just settle into a trading range, something that the FTSE just does so well. But it seems that most trading sessions will attack the previous day's high and surpass it. So I probably wouldn't be surprised to see that FTSE could attack 8,300. So what's interesting now is that the FTSE is rallying and the DAX has just managed to close above the previous bar's high. That previous bar high was 21,113. So I imagine that this will send some positive vibes through to traders and that they will begin to buy dips. But remember, this is just on the 5-minute chart. You want more certainty, you need to see it on a 10-minute chart, or even better, a 15-minute chart. So I'm going to add to my FTSE just a little bit. I won't post this in the Telegram channel because it's just, I'm adding just £1 a point. So the DAX is posting an aggressive school run. As you can see here, long about 33 and short below 89. What I think is interesting is this, how this bar here, we closed above it and now we're trading below this again. That's going to be concern for some traders. Here you see it on a 1-minute chart. I just want to reiterate my stance here. I am somewhat cautious this morning because I generally am after a holiday. Never quite know what to make of it. My anticipation would be that the bulls managed to get a close above a prior bar high. And this is a fairly deep retracement. So perhaps I'm not the only one who is a little cautious. Of course, this cautiousness all stems from the completely unstatement-like comment from the President of United States of America, who is now having it out with his own quote-unquote central bank governor on his own platform. It's a unstatement-like tactic to debate policies for the masses to participate in, trying to garner sympathy through the masses. I'm sure it has a psychological expression whereby you air your frustrations in public, trying to invoke sympathy and support. This is what it looks like on my platform. Okay, so the bulls managed to hold and is now pressing above this micro double top, so this is looking better for the bulls. I haven't got a position in the DAX yet. Whether I'll take one or not remains to be seen. We're currently working on the second 15-minute candle, which will complete in about 4 minutes. Incidentally, if you are interested in using this software that I'm using, which has some abilities that I really quite like, such as moving the stop losses quick, moving stop loss to break even, reversing positions, which is one of my, anyway, I'll discuss that another point. Just send me a message to at Tom HOUGAARD on Telegram and mind the scammers, and I'll direct you to the right channel where you can download it for free. Does require that you have a platform. It sits on top as an extension of this platform here. Might not be the prettiest platform in the world, but the spreads, man, the spreads they have are amazing. So still somewhat unclear what kind of day this is going to be, or even what kind of morning it's going to be. You know, that was a pretty spirited attempt to push higher in the DAX, but sellers came in. And as you can see on the 15-minute chart, we are still sort of contained within the range of the first 15 minutes, which isn't a bad thing, of course. It just tends to suggest that it will be a while before you will get a breakout. Fortunately, the FTSE is sort of dancing to the tune of its own interpretation of the markets, which is good for me. I did actually trade this account last night, both badly, and I'll see if I can show you. So this goes to show that even on this account, I took the money out, by the way, just so there was no confusion. But I traded the Dow in £100 a point. I had a series of I was trying to push the short side in the DAX, and I'd built up a short position, and then it reversed, and then I saw that's a sign on, okay, go in big. And I did, and I made about £3,000-4,000 relatively quickly. But I've taken that money out just to reflect to the balance, and that's absolutely. I'm not going to suggest that at all reflects this 10k challenge. It was merely just that was the account I was happening to trade. So I'm just going to add a little bit more in the FTSE. I should probably move my stop loss up soon. So here we go. We are now set the parameters for the school run. You have a long position above 158 and you have a short position below 091. Just going to add a little bit more in the FTSE. Hoping to see 8293 or higher. So the FTSE is now trading below prior bar low. This is a point where I would love to see buyers stepping in. My average price is 72.8. So unfortunately, that position is now beginning to lose me. As you can see, all my positions are now turned into red. So here the position, here's the FTSE chart without my positions on. Just click on this button here. This is not looking so good now. So I am ready to close it if need be. With respect to the DAX and the school run, I'll just take off the aggressive school run. I'll just show you traditional school run entry lines. So the DAX is pretty close to testing the school run lower boundary at 91. So normally I would say that this is inside the trading range of the overnight, and therefore the anti would kick in. Today I am perhaps a little concerned about the fact that it was a holiday yesterday and Friday, so I'm not quite sure what is going through the minds of traders. Do they factor in the drop in the Dow last night, or do they factor in the fact that we have rallied quite a lot since? That's my headache this morning, because right now it feels more like a trading range. Which would mean that the anti would probably be the place to be. But I'll reiterate, I don't mind sitting this one out. I'm going to add a little bit to my FTSE. I know some people would say I'll just add it to a losing trade. I really haven't. My position is in positive. I know it gives the impression that my position is losing, but if you look at the account, it's not actually losing. DAX is still deciding. I think I'll move my stop loss to break even in the FTSE. So that move lower in the FTSE was just like a double bottom retest. I think I'll remove some of these. Actually, I can't be bothered. I'd rather just. So far the traditional school run has failed, and the anti, which the hypothesis argues should have executed today, is doing really well. So I think I'll begin to close a bit of FTSE, mostly because I actually have to finish this streaming in the next 10 minutes or so. So I think, okay, it would be, it hasn't quite met its objective. And I think the objectives on a Tuesday after an Easter could be, geez, it could be anything. You look at the, I'll show you this chart again, and it does suggest that the FTSE could flirt with a price around 83.10 or higher. So I'll show you the daily chart. So this is what it looks like. So let me show you the account. So so far I've taken 130 odd pounds in profit, and I got about 160 odd in the table. So I'm going to click out of this and this, and then I think I'll close half of what I got left. Currently I have 7.5 left. And you know what? For all intents and purposes, it's kind of met its objective. I can't tell you what to do, but I have closed mine. So I'm just checking there's no order orders, and I'll give you transaction history. So here it is. Opened the FTSE around 71 on its core position. Then I added at 78, 82, 81, 78. And I've closed it here. It's currently trading at 89. And I've closed it at 88 and 90 and 90 and 90 and 90. So it's a really well executed FTSE trade that made about, I don't know, 200 or so pounds, perhaps a bit more. 200 and... Geez, my brain is not working this morning. What's that? 250, 60, 70, 280 pounds on this account. So this is my first live session back since we departed company. I had an Easter break. It was a really nice break, although I must admit I traded a whole lot more than I thought I would do. But it happens, doesn't it? At times you just get wrapped up in the market. Let me just take a screenshot of this. So there we go. So I did have an idea that today or this morning's session would be I knew it'd be shorter because I have some things to do. But I also went in here thinking, okay, just be a little careful, especially with the DAX. I think that was a good call. FTSE obviously is not ready to break out yet, so the exit of 90 which was at the top end of the range, worked very well. I had I had a comment from a gentleman who argued that he felt that my £10,000 challenge had turned into a demonstration of my abilities as a trader, rather than being an educational element. Now, when I get comments like this and they're well presented, I do take them seriously. as opposed to people sending me abusive messages and the likes. But I don't agree, respectfully. I think that what I'm doing is attempting to show you under the pressure of many thousand people watching me how to behave and conduct myself. And I do think that there is an educational element to it. It may not be what it was, what I did last year, where there was much more focus on just posting trades. But what I like about this format is how I do it in real time, and I attempt to talk you through it. And I don't think that it's necessarily a reflection of that I'm trying to impress the world that I am a good trader. But you have to respect that people they don't see the world as it is, they see the world as they are, and I obviously see the world, or I see this as I am, and they are entitled to see it as they are. But don't forget that this whole experiment actually started because someone sent me a message to say, look, you trading £100,000 account is not something that I can relate to. And I said, that's a fair point. I'm going to deposit £10,000 on my trading account, and I will prove to you that it is possible to derive a living. But of course, you have to understand that in a game where the most people fail, you have to work spectacularly hard at the factors that makes the other people fail. And I don't think for one second that people fail because they don't understand chart analysis. I refuse to believe that. My hypothesis is that people fail at this game not because of a lack of knowledge in trading, but because of their inability to execute their plan at the most critical times. And what I mean by that is that the very nature of trading is such that when you're playing a zero-sum game, meaning that for every winner there's a loser, you actually have to have the ability to override your emotional response system, because it is the emotional response, it's the natural inclination. Just like we have a natural inclination to want to breathe, to want to procreate, to want to eat. But the same instance, we also, at its most basic level, want to stay alive. And that means that we will shun the things that seem risky. But trading, by its very nature, is a risky proposition, which requires you, it asks of you to do the very thing that perhaps you don't want to do. Point in hand, I wanted to get out of my FTSE position because it was beginning to lose me. But instead of listening to my emotions, I looked at the chart objectively, as if I didn't have a position, going, what do I do now? And in the same vein, up here, where I just took profit, there was a part of me that said, run this thing, it's gonna run. But I looked at the chart, looked at the time of the day, I'm thinking, maybe I should just clock out because the DAX isn't exactly supporting this hypothesis. And so being able to do the very thing that perhaps you don't want to do emotionally is what sets a winning trader apart from a losing trader. We can discuss technical analysis until we are blue in our heads, blue in our faces, whatever. And certainly technical analysis has merit. I mean, how else would I know to be a buyer of the FTSE down here? Well, I wouldn't know if I hadn't done the research on the first bar positive, first bar negative. How would I know about the DAX construct this morning with an inside bar and to be careful? And well, that's where the research comes in. But as the saying goes, knowledge is quite useless without the will to act upon the knowledge. And I think that's where most people go wrong, not just in trading, but in life as a whole. We know what it takes to get that six-pack. We know that a six-pack is made in the kitchen. It means that we have to be careful what we put in our mouths. We know fundamentally how a diet works. It's running a calorie deficit. But in doing so, we need to override a basic mechanism calling, I want to eat. Because that's what my body is programmed to do. And in trading, it manifests itself in, for example, trying to be a buyer on the way down in the Dow yesterday, where every single little white bar is bought up by those who seek out the emotion of things being cheap or expensive as deemed by conventional and traditional thinking. If something is trading at 500 and now you can buy it at 250. For example, let's discuss the Tesla chart. I don't know if I can bring up a Tesla chart, but it probably wouldn't take me. Tesla chart, Tesla share price. So if we look at I'll just show you this. So if you look at the Tesla chart, you're thinking, well, that is an enormous, can I resize this? That's an enormous price drop in Tesla. And by conventional thinking, this is now cheap. Tesla is really cheap. But the reality is that if this was toilet paper, which is a standardized product, yeah, toilet paper that used to trade at 400 that you can now buy at 227, it has the same functionality of wiping out butts. And so of course a 50% haircut in toilet paper is cheap. If it was a filet steak or the gas that we're putting into the tank in our automobiles, well, of course it's cheap. But those are tangible assets. We might think that Tesla is a tangible asset. And yes, the car is a tangible asset. But that's not how the financial markets are working. We might think that that's how the financial markets are working. And perhaps for the long-term investor, there is such a thing as a tangible asset in a share price. But for someone who has specialized himself, and I'm talking not about me necessarily here, but also you, we're specializing ourselves in reading the market sentiment. And in doing so, we are hoping to make a living from it. We have to be extremely mindful of not falling prey to this mindset of cheap versus expensive. And I say that that would apply the vast majority of the time. Of course, there are times when you're thinking, Jesus, this is really expensive. But that tend to be something that people who aren't in the market say. So if you cast your mind to, say, Bitcoin, you might say, oh my God, Bitcoin is ridiculously expensive. Not to the people who are invested in Bitcoin. They think it's remarkably cheap and it's still going to go higher. And so having knowledge about, and I'm talking about intimate knowledge about how something behaves, isn't necessarily the same as being able to profit from it. Rather, those who seek to make speculation their profession would do far better in studying their own behavior. For example, say that you had shorted the DAX here this morning, and say that it ended up losing you money. Well, the person that will really accelerate their learning in trading is the person who keeps a constant check on their trades and try to learn from those trades, saying, well, why did, maybe this is not the best example. So for example, let's look at the Dow Jones yesterday. If I bought there because I saw a positive bar after 4 or 5 consecutive bear bars, why am I buying here? And so every time that you execute a trade, you ask yourself, am I trading from the vantage point of strong reading of the chart? Or am I indeed subconsciously trading a desire to buy the low of the day? On my software, there's a function that obviously I don't have an open position right now, so I can't really illustrate it, but let me just, if I just opened a fake position here, feels a bit silly to do so just to demonstrate it, but I do feel that it warrants it. So I'll short the FTSE here thinking. So there's a function here called reverse position. Now, reverse position, imagine that you could only trade using I want to be short or I want to be long. Imagine what that would do to your mindset. What I'm really saying here is that imagine that you could only either be long or be short. It means that whenever you are in a position that is winning you, you can no longer think of it as I want to get out with a profit. Because if in doing so you close the position, you have to accept that it is now going in the opposite direction. Did I just yeah, no, I didn't do that. So if I click here, reverse position, don't know why it's not working. Maybe this is too small size. Let's just get rid of this. So imagine that you only had 2 ways of trading. You could either be long or you could be short. It forces you to say, well, if I get out of this profitable long position, I have to be short the market. Do I want to be short the market? And then it might not necessarily mean much in fundamental terms. I don't not for 1 second suggest that you need to be either long or short all the time, but it forces you to say, am I taking profit because I generally think that this market is about to reverse? And the person who is able to attack his own behavior or her own behavior with that kind of mindset is going to be far more likely to succeed than the person who dwells all his time on, hang on. Sorry about that interruption. So the person who dwells more time on how they would react rather than trying to become an absolute expert in every single candle formation, I think has far greater chances of making trading something that they can make a living from. I fully believe that. I don't think we fail because we don't know enough about technical analysis, because there are so many permutations to what can happen on a chart. Doesn't mean that we can't acquire a skill set like, say, Al Brooks, who is an exquisite technical analyst. Now, I don't know what he's like as a trader, and that's not for me to comment on either, because he doesn't trade live how I do. And I'm also certain that there are far superior traders to me in the world, I think. Although I'm pretty sure I can hold myself up against some pretty good ones. But I don't think that I was able to generate the wealth that I have from trading purely from looking at charts. I do believe firmly that it is also because of how I'm able to handle emotions when I'm trading. Ladies and gentlemen, I have to go. It was a pleasure being here with you. I hope that you enjoyed it, and I will see you for the US session. All the very best. Bye-bye.